Business.
Car making, Part 1. Electric or. A Tesla bull debates.
Tesla's share price will travel in only one direction, up. Despite accelerating in ludicrous mode by more than 700% in 2020, Tesla has plenty left in the tank, to borrow a phrase that the firm is consigning to history. Its impact on the car industry cannot be overstated, but it is a mistake to judge it by the standards of the firms it will leave in its tracks. Tesla is a technology firm set to disrupt not just car making, but personal transport, energy, thanks to its battery technology and solar power, robotics, healthcare, and more besides. Its valuation is justified by its potential to dominate the future of mobility alone. Operating margins were close to 7% in the first 9 months of 2020, higher than any big rivals, and rising. Its market is exploding. Electric vehicles, EVs, now make up around 3% of all car sales, of which Tesla accounts for a fifth. As regulations tighten and ranks of climate warriors swell, a third of all cars sold globally will be electric by 2030, rising to over half 10 years later. Even if Tesla won't make 20 million EVs a year by 2030, as its boss Elon Musk hopes, it could control 25 to 30% of the EV market. Tesla's production hell is in the past. It just about hit a pre-pandemic delivery target of 500,000 cars in 2020 and rapidly erected a new factory in China, which on January 18th delivered its first Model Y, a small SUV. Another will come online shortly in Germany. So will a new battery gigafactory in Texas. This, and the ease with which it raised $12 billion of capital amid the COVID-19 crisis, shows it can expand at will. The firm's proven knack for speedy innovation will let it keep an unassailable technology lead over both established car makers struggling to free themselves of the legacy of internal combustion and newcomers looking to steal its crown. Like other tech Goliaths such as Apple, its products will continue to define the category. Mr. Musk has remade the car into a connected electronics device that will soon drive itself. Autonomous technology is already fitted to many Teslas, awaiting regulators to approve it. This will put Mr. Musk in the front seat of the robo-taxi as the world moves towards mobility services. Tesla's greatest asset is Mr. Musk, a visionary, spearheading rocket trips to Mars, neuroscience, grid-scale batteries, and other transformational technologies. Investing in Tesla is a bet on his genius for turning the future into dollars.
Car making, Part 2. Electric shock. A Tesla bear.
Tesla's share price can travel in only one direction, reverse. A market value of $800 billion, equal to that of the next 8 biggest car makers combined, is predicated on Elon Musk's shake-up of the industry. Building a brand swiftly and making electric cars trendy is a real achievement. But Tesla's revenues come from selling cars. Sales are rising, yet would need to swell 7-fold to match Toyota's. Good luck. Yes, Tesla missed a delivery target of 500,000 cars in 2020 by a mere whisker, but it once said it would be making 1 million a year by now. A goal of 20 million electric cars by 2030 looks like another wild overpromise. Mr. Musk has admitted that unless costs are contained, the share price may be crushed like a souffle under a sledgehammer. Competition is getting fiercer. Big firms dragged their feet on electrification for a reason. Batteries were costly and electric cars niche products for the rich. But prices have fallen, regulations have tightened, and buyers want electric vehicles, EVs. The giants promise a traffic jam's worth. General Motors says it will have 30 models on the market by 2025. Volkswagen Group is eyeing 70 by 2030. Startups, many in China, are powering up. Mr. Musk's technology lead is running out of road. Rising profits in 2020 might reassure investors, but come mostly from selling carbon credits. And Tesla is not immune to the traditional forces that govern car making. Some models are aging. Sales of Model S and Model X are falling, and the firm is losing market share in Europe. In the first 9 months of 2020, VW, Renault, Nissan, Mitsubishi, and Hyundai Kia all sold more EVs in Europe than Tesla did, according to Schmidt Automotive Research. The hype about autonomous cars has worn off as developing self-driving systems has proven tricky. Tesla's pseudo-autonomous system requires constant monitoring by the driver. The full autonomy that would give robo-taxis the freedom of the open road is years away. All this suggests Tesla will remain a niche luxury firm. Then there is Mr. Musk. He has toned down erratic tweets, like the one in 2018 implying Tesla was about to go private, which got him into hot water with regulators. But he is spreading himself too thinly between Tesla, SpaceX rocketry and other ventures. The strains from Tesla's expansion could again bring out his demons and spell disaster for shareholders.